Good afternoon, friends. Welcome to Konexio Technical Insights. I am Rahul Randeria and I would be conducting today's show. Today, we would be discussing regarding the trends, the setup, the technical indicators, the technical charts, the candlestick patterns, Nifty, Bank Nifty, as well as on the different asset classes. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that in this intense selling pressure, Nifty is just nearing around its crucial support of 16,500 and 16,700 to 16,500 might act as a bottom, or we might take that this intense selling pressure might get exhausted and we might see a technical pullback. And our strategy was buy on dips. Nifty uh, made a bottom of 16,800 and then started rallying, and then we have seen a technical pullback from those levels. And on Friday, we have seen that Nifty almost made a uh, higher of, I mean to say, a swing high of around 17,490 to 17,500 odd marks. And from there, we have seen some sort of profit booking coming in from those levels. Now, looking at the charts, now let us discuss what we are expecting in the next week. On the Nifty daily charts, we have been mentioning you will see on the screen that on the Nifty daily charts, in the last 3 to 4 weeks, we have been mentioning that Nifty has been moving into a downward falling channel. It is just a time correction as well as a price correction. Currently, the setup is just between this particular falling channel. From lower levels, you can clearly see that it has taken a support near the support line and then it has bounced. Now it is, if you see, of the last 2 to 3 weeks, it has formed a small inverse head and shoulder pattern on the Nifty daily charts. And just the breakout would be, or we could see that 17,500 to 17,600 could be the neckline of this particular inverse head and shoulder pattern. And once this breaks, we might see Nifty heading towards the upward resistance line, which is just around 17,800 to 17,900. Now looking at this pattern, and if you see from March 2020 till now, Nifty has almost corrected 8%, 10%, 12%, and from there we have seen that Nifty again has started rallying and made new highs. So looking at that pattern, and if we just try to combine this past history, I feel that looking at this pattern in next 60 days, Nifty might again try to re-challenge the levels of 18,600, which was the all-time high. So again, I'm expecting that if this is a bottom, then Nifty might again re-challenge the highs of 18,600 in next 60 days from here onwards. But as of now, we will just take a call that Nifty might head towards the levels of initially 17,500, and then if it breaks 17,500, then it might head towards 17,800 to 17,900. So looking at the pattern, price pattern, oscillators are also into a comfortable zone. We feel that any further correction, maybe 40, 50%, 60% correction in the Nifty should be used as a buying opportunity for an upside a target of 17,500 to 17,600 for next 8 to 9 trading sessions. So now let us discuss, the support and resistance in the Nifty for the next week. The important support in the Nifty is placed at 17,064. The second support in the Nifty is placed at 16,931, and the third support is placed at 16,782. Whereas on the upside, the first resistance is placed at 17,324. Second resistance is placed at 17,489. And third resistance is placed at 17,617. So these are the crucial supports and resistance. Traders are suggested to closely monitor these levels and trade accordingly in the direction of in the trend. And the strategy would be buy on dips, as I said earlier. Now let us discuss what we have observed in Bank Nifty. In Bank Nifty also, Bank Nifty has also corrected almost more than 14% from its size. You can clearly see, and it has been moving into a downward falling channel, which was clearly managed or maintained in this particular November whole November series. You can clearly see the prices being overlapping in this particular channel. It has taken it was just above the support, and then again Bank Nifty is trying to break this particular resistance line, and we are still expecting that maybe sooner or later in the coming weeks or coming days, Bank Nifty would again break this upward rising channel and start inching towards the level of 17,500, 37,500 to 38,000. So as I said, the price has corrected more than 14% from highs to the swing low. RSI is also into comfortable zone. From lower levels, Bank Nifty has also rallied on Friday. Yes, we have seen some sort of profit booking, but I feel that at lower levels, maybe, as I said, maybe 100, 200 points if there is a cool off in the Bank Nifty for next week, initial on Monday, that should be used as a buying opportunity. So now let us discuss, the important supports and resistance in Bank Nifty. The important support in the Bank Nifty is placed at 35,805. Second support is placed at 35,526. Third support is placed at 35,327. Whereas on the upside, the first resistance is placed at 36,563. Second resistance is placed at 36,844. And third resistance is placed at 37,364. So these are the crucial supports and resistance in Bank Nifty. Traders are suggested to follow this levels closely and trade accordingly in the direction of the primary trend. Strategy is, as I said, buy on dips in Bank Nifty also. Now let us come to the third segment, which is option analysis of our show. In option analysis, we would discuss what we have observed in the options chain, where the concentration of the open interest has been built up in the particular calls and puts in Nifty and Bank Nifty. So first of all, let us discuss what we have observed in Nifty. In Nifty calls, we have seen that the action was seen in 17,200 calls, then 17,300 calls, 17,400 calls, and 17,500 calls. Now here you can clearly see that there has been a rise in the open interest. But in the percentage change, you will clearly see that on Friday, when there was a sharp sell-off, we have seen that there has been a strong writing seen this is in Nifty out of the money calls. So as I said, 17,500 would act as a major resistance for the next week. So traders are suggested, to trade accordingly when if there is a dip in this in the next week or on the initial days, maybe on Monday. Here, implied volatility is also in a comfortable zone. So we feel that Friday was just what we call as simple intraday correction, and that would be bought at the lower levels because the primary trend seems to be positive. Yes, initially we might see some sort of correction, further correction, but that should be used as a buying opportunity. Now let us see what we have observed in Nifty puts. In Nifty puts, you will see on the screen that the action was seen in 17,100 put, then 17,000 put, and 16,900 put. Now here you can clearly see that there has been a rise in the open interest in 16,900. But most important thing is that we have seen shedding of the open interest in 17,000 put and 17,100 puts. So that might clearly indicate that we might have some sort of profit booking in Nifty puts on an intraday basis. When markets were correcting for the day, I feel that on the end of the day or last leg of the day, we might see some sort of profit booking in Nifty puts. Now here you can clearly see there is a rise in the open interest in 16,900. There has been shedding in 17,000 puts and 17,100 puts. The percentage change is in positive trajectory. The implied volatility, you can clearly see it is slightly higher. It is around 18.4, 18.5. So now here some sort of indication is that again the shedding of open interest in the Nifty puts might bring in buying in the Nifty at lower levels, because the smart money might be thinking that now let us book profits in Nifty puts, because in the Dow theory also the charts, the wave theory also is indicating the previous resistance has become a support. So maybe this particular 17,100 could act as a important support at the lower levels. So as I said, the strategy should be buy on dips in Nifty also. Now let us discuss what we have observed in Bank Nifty options in calls and puts. First of all, we will discuss what we have observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 36,500 calls, then 37,000 calls, and 37,500 calls. Now here you can clearly see there has been a rise in the open interest, but there has been a significant percentage change in the premium. That is because as we said, with the intense selling pressure on Friday, and the smart money have started writing Bank Nifty calls at the higher levels of the far strike price. Now here you can see the implied volatility is high. So maybe because of this there might be selling or the writing seen in the Bank Nifty calls out of the money strike prices. But as I said, the charts are showing something different pictures. So maybe, as I said, further on Monday we might see a follow-up weakness, but that weakness could be bought at the lower levels. Now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, you will see on the screen that the action was seen in 36,000 puts, then 35,500 puts, and 35,000 puts. Now here also you can see there has been a rise in the open interest. There has been a rise in the option premium, and there has been a significant rise in the implied volatility. You can clearly see the implied volatility is shooting up from 22.5 to 27 in 35,000 puts. So now here, this rising implied volatility is clearly indicated that smart money might start booking profits in Bank Nifty puts, and that particular thing might bring in buying in the Bank Nifty futures. So definitely, as I said, the charts and the option analysis is clearly indicating that we might find, or the markets might find, support at the lower levels. So we would advise traders not avoid going short. If they are short, try to book profits on follow-on selling on Monday and try to go long at the lower levels, because we might see again a pullback rally from these levels at least in the next 7 to 8 trading sessions. So the strategy should be buy on dips for the next week. Now let us come to the last segment of our show, which is the positional call. I have identified one stock from the FMCG sector. The name of the stock is Colgate. I mean to say Colpal. The stock has been correcting or the prices have been beaten down from the levels of 1800 till 1400 in the last 3 to 4 months. In the last 2 and 2.5 months or 3 months, the stock has formed a downward falling wedge. You can clearly see on the screen. When the prices were going down, the RSI was making a higher tops, which is clearly indicating that RSI is showing a positive divergence, downward falling wedge. The stock is on the verge of a breakout, and in such type of volatile times, uh, we are recommending traders or investors to take cover under the defensive stocks. So FMCG is a sector where the capital could be saved, though the returns might not be that much fast, but it might be growing slowly and gradually from these levels. The current market price of Colgate-Palmolive or Colgate is 1450. The stock is on a verge of breakout. The price volume actions and indicators are showing positive signs at these levels. So long-term investors, positional traders, swing traders can buy the stock at current levels at 1450. Even there is a correction still 1420. One can buy the stock. We have an upside target of 1650 in long run. Anybody who wants to play a bounce back from these levels can again buy this stock maybe for next 1 or 2 months. We are having a target of almost 1500 to 1525 from the current levels. So definitely swing traders, positional traders, long-term investors can buy Colgate. It is a defensive stock for investment. So definitely the pattern is showing some sort of reversal sign at these levels. So one can buy at current levels and on dips for an upside target of 1650 for long term. So let us conclude the show. Thank you very much, friends, for watching the show. Any suggestion you can give into the comment box. Have a nice trading week. Thank you.